Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is a special edition where our focus is on the new listings. It is a day of new listings on the Lal Street, and the company on our radar is Fedbank Financial Services. The stock has made a subdued debut, listing at about a 1.6% discount to the IPO price of 140 rupees. The shares opened at 137.75 on the NSE and 138 rupees on the Bombay Stock Exchange. And then we also saw some slippage on the stock as well, about 3 odd percent or 4 odd percent as well. Let's try and find out what the outlook on the company is from the company's top management. With us joining in is a very special guest. Anil Kothuri joins in. He's the Managing Director and the Chief Executive Officer of Fedbank Financial Services. Mr. Kothuri, welcome to Business Today Television. Good to have you with us. Congratulations on the listing of your stock. Although there has been a subdued listing, are you slightly disappointed with it, looking at your peers that have actually listed on a substantial hike, or do you think that this is a part and parcel of the markets and you will slowly and gradually be able to recover the losses?
So first up, we are very gratified that over 2.5 lakh people have reposed trust in FedFina and have bought into our vision to empower emerging India with easy access to loans. So we broad-based our shareholder base from 2 to 2.5 lakh. So that's an important milestone, and we've got listed today. Okay. So from here on, we are hoping that we will deliver results which should then result in whatever consequences that there will be for the stock price.
Absolutely. Mr. Koturi, let's try and understand a little bit more about, the funds that you raised from this IPO and what your plans would be. How would you be you using the funds that you have raised via this IPO? There has been both a fresh issue of 600.7 crores and an offer for sale of 492 odd crore rupees. But of the 600 crore rupees, how do you plan to now deploy them, and how will they assist you in your business growth?
So our equity base as of the end of June was 1415 crore rupees. Okay. So there's the profit we'll make in September and this addition of 600 crore rupees. So that should take up our net worth substantially. Okay. What this gives us is the ability to lever up and then grow our AUM, and it helps fuel our plans for the next 3 years. Over the past 3 years, our AUM has grown at a compounded rate of 37%. And this is including, COVID, where there were lockdowns and stuff. So now that we have a reasonably free runway ahead of us, we should do an AUM growth of at least as much. Also, a profit over the last 3 years has multiplied threefold, which means the AUM growth has disproportionately raised our profits, and this is because the operating leverage that we have through the investments that we made previously. We are hoping to continue the same trajectory on the top and bottom lines.
Right. So let's try and understand about your loan book. There is a lot of portion that you have, loans to the self-employed customers. The last time I spoke with you, you told us, you provide working capital solutions to them. There is also the pledging of gold and mortgage of property via which you give out loans. And then there is the unsecured loan book as well. Just for the better understanding for all our viewers, could you give us the split there, and how do you plan to going forward from here in terms of the revenue split from all of these?
So the mortgage book is about 55-ish%, gold is about 30-ish%, and unsecured is about 14. So that's the rough breakup that we have. Now, what happens is that the longest tenor of any loan that we give is a mortgage loan. Behaviorally, it stays on the book for about 8 years. So with each passing quarter, the proportion of mortgage loans in the overall book will keep increasing. Okay, and the proportion of unsecured will keep coming down. So that's the way the book is going to morph quarter on quarter from here on.
Okay. So on unsecured loans, I also asked you this last time around, and you really said that you do not expect much impact of the recent RBI norms on the higher risk weightage on the consumer lending. Have you been able to assess a little bit more on that account, on the fact that what kind of an impact could it have on your cost of borrowing and perhaps on your CAR as well?
So there are two different kinds of impact that the RBI circular has. First is on the risk weights. Okay, any loans given out for consumption will have a risk weight of 125 as opposed to 100. Now we've dimensioned the extent of loans that we have which are given out for consumption, and it looks like the impact that they will have on our risk weight is between 15 and 20 basis points. But given that we are taking our overall CRA up quite significantly, post this IPO, I think that
Mm.
the impact is anyway only academic. Now, the second impact is in terms of borrowing costs. The risk weights for a double A category company will go up from 30 to 55%. Whereas for a AAA company, it will go up from 20 to 45%. So paradoxically, the companies most impacted will be the best rated if you just look at it through the lens of increasing risk weights. But having said that,
Mm.
that impact is yet to play out. There is a risk weight element. There is also a commercial element. You're probably aware that in the year gone by, when we were rated AA minus, our cost of borrowing was a full percentage point better than AA plus rated players. So there is a spreadsheet or a number impact, and there is also a commercial reality that plays out. We are hoping that the latter will trump the former, as always.
Okay. So you did talk about how your financials have been pretty robustly and going strong over the last few years as well. I wanted to just touch a base upon the ROA. When we compare FY23 ROA to your peer average, that is slightly lower. How do you plan to increase that going forward, sir?
So the ROA is almost entirely a function of how much capital you use. There are companies which have 20% of their AUM funded through capital, and there are companies which have larger numbers, some even up to 50%. Now, you look at us, our tier one, okay, or the capital that we use was about 15ish percent for the quarter ended June. Okay, so that means we pay interest cost on 85% of our AUM, whereas for, let's say, another comparable company, it is only 50%. So obviously, that is a difference that drips through into the ROA. Okay. To my mind, a more appropriate metric would be the ROE, okay, which also looks at the leverage that one is using. And on that metric, in the quarter ended June, we were at about 15.6% in terms of ROE. So for our shareholders, we've been returning 15.6% on their capital, which is among which compares favorably with uh, a set of peers that you may choose.
Fair enough. Sir, also when we talk about the gold and the MSME finance industry, the entire industry is facing a lot of rising competition, not just from regional, but also frontline banks. There are small finance banks, NBFCs. It's turning out to be quite a crowded space. Do you still feel that there will be enough growth opportunities for players like you here, even going forward, despite the rising competition?
The reality of the MSME segment is that it is underserved. Okay, only a quarter or a fifth of the demand is catered to, and the rest of the demand just goes a begging. Okay, you look at the loan against property business, the industry AUM is something like 6 lakh crore. But the small self-employed customer, the kind who does not have a PNL or a balance sheet, that AUM is only 20,000 crores, which means this segment only comprises 3% of the overall industry. So this is a segment that is getting created as we speak. And, sitting here in Bombay, we see competition. But you go to small towns, you see, a lot of customers whose needs, whose demands for formal finance are not met. Okay, there's scope for, Fedfina and many, many companies like Fedfina to make a mark in the segment.
Fair enough, sir. Well, on that note, thank you so much for speaking to us on Business Today TV. Here's wishing you all the very best for your journey in the stock markets. And there'll be many more occasions when we touch base with you to understand more about the business and the outlook going forward. So, all the very best to you and see you around the quarterly results, sir.
Thank you very much.